Hey, welcome back to Everything Money. We're so glad you joined us again. We're doing another reaction video. We do one of these once every couple weeks. So I do get some comments, Paul, is this all you guys do? Absolutely not. We do 17 other videos.
We have 700 videos in our...
700. We've done like five of these. So yeah, thank you, Mo. So the other comment I see with some of these is, why would you guys just watch one video of a guy then make a decision? I hate to break it to you, but when you log onto this website called youtube.com, they're going to put a video in your face. And if you click on it, that's the one video you might watch.
How it works?
And therefore judge someone on what they say. So that's what we're going to do here. It's the same thing, kind of like, Paul, this weird thing where you walk up to someone, shake their hand and say hello. And if they're a complete asshole, like you are most of the time, they might judge you. But you're okay being judged. You are you.
F are you.
Or kind of like they're doing on all of our reaction videos.
Yes, that I was just going to say. I say the same thing. So, yeah. So, guys, this guy is called Chicken Genius Singapore. I will feel...
Wait, what?
That's the name of his... The show is...
You're joking.
Yeah, he doesn't often say who he is, but...
Chicken Genius
Singapore.
I assume he's in Singapore.
Yeah, I would think so. Yeah, so here we go. I'll fill you in as you ask some questions, or maybe
What
you're wondering.
do you mean Chicken Genius?
The name of his show, I don't know, the name of his YouTube channel is Chicken Genius Singapore. And maybe the 10 videos I watched, I didn't have him say, hi, everyone, my name is this. So
okay.
So here we go. You ready, guys? Here we go. Paul, here's the take. The premise is, it's actually two videos, Paul. One is short and one is long. And the premise is why value investing is dead and we've entered a new realm of investing.
I love it.
Here we go.
By the way, can we just stop real quick?
Oh, already?
He's wrong. Next.
Next video?
Next video.
Okay, here we
mic
go.
holder.
Here we go.
Hi friends, I really do not know how to say this nicely, but my goal is always to tell it as it is. So most of you know that value investing involves some kind of method of calculation. The biggest problem is there is no way to calculate value. If there is no way to calculate value, how do you even evaluate if the company is cheap?
Before you say that, before you even say time out.
Yeah, Mo just looked at me because I was
Can
just like...
we just keep the camera here so I can just stare at him?
What do you mean there's no way to calculate value? And by the way, these are the same people who tell me I don't value growth when I'm the one that actually can value growth.
Let him show you. Let him show you.
Before I start bitching, appreciate the early thumbs up. What do I mean by there is no way to calculate value? Within a company, there are usually like machineries, computers, assets like property, even database, etc. All these have certain value. Yes, I get it. You can go into a company, count every single wire, every single computer part, every chair and table, every machine, and I assure you, your numbers will be...
What's he talking about?
Just let him go. Just let him fill it in a bit. Right. He's saying when you calculate...
I understand what he's saying. Is this a joke?
Just hold on. Here we go.
Wrong. A company may buy a computer, let's say for $1,000.
No, move on from the computers. You're not worried about computers when you value a company. This is ridiculous. Like, and you know what the funny part is? Everybody accuses me of not valuing growth. Immediately my head was, forget about the assets. I don't care if there's no assets. If there's a growth to a cash flow stream...
Yeah. I think he gets to that. I think he gets to that, yeah.
Company will increase by 1,000. The same applies when a company buys like data centers, machinery, and all those kind of stuff. The biggest problem is if the company is liquidated, I assure you it is not going to fetch the same value. Think about it this way. Let's say Apple takes $1 million to renovate the Apple store. If the store is liquidated, no way you're getting back the $1 million. If an oil company decommissions a rig, do you think they're going to recover the cost of the rig? There is no way to accurately calculate value. It's crazy to even think people sell courses for thousands of dollars to teach people how to calculate value. You make investors trust your shit.
This guy is very stupid.
Yeah, I just don't understand.
This is absolutely asinine.
So,
if you are watching this out there right now, the best investors of all time have calculated value in so many different ways. If you think that value investing is dead, then just stop watching this video. It is has it not done well in the last 5 years? Well, absolutely. Why? Because all the best companies have been the ones that it's hardest to gauge value.
I'm wondering why he leads with this. He's talking about if Apple spends $1 million to open a store.
This is something that
Meanwhile, we're talking billions. Does he know the difference between 1 million and a trillion?
$50 billion.
$50 billion in revenue.
In profit. No, in profit, not revenue.
That's right, in profit.
Even with that, this is such a in the grand scheme of things, this is such a small thing that you start to look at later. And I mean, why is he leading?
So
with this?
there's several methods to value investing, one of which is liquidation, which he's talking about right here. When it comes to liquidation, you don't care about the computers in the office.
Right.
You don't care about build out. You write that all off. What you're looking at is major property, plant, and equipment. So for example, a factory is built for $100 million. 30 years later, it's depreciated to zero. That's where a value investor goes, wait a second, that factory's been depreciated to nothing, but its market value is actually $200 million. There's $200 million in the balance sheet that's not showing up there.
Right.
That's liquidation, not, hey, I bought this computer in 2019 for $2,000 and in 2025 it's worth 300.
Yeah.
No one cares about that.
So he's saying, like, why would people, I guess he's saying, why would people offer some sort of course to learn a value and you're just throwing your money away, which you'll go into?
Trust your shit, put their life savings into your as calculator only to lose their life savings, and they wondered, like, what went wrong? Then these investors approached the teacher, and I can guess their most probable answer.
Terrible videos.
It's been 90 seconds, so yeah, here we go. Hold on.
Their most probable answer. Did you like diversify? Did you do your own due diligence? Oh, come on, f off. Seriously, tell me in the comment.
Can we what the hell is happening?
just-
Also, before we go on, can I know?
Do you want some background?
Yeah, I want to know,
Fine.
what does he invest in?
It's very hard to find any. It's very hard to find a lot of information on him. Here's the key. He says multiple times that he has run numerous successful businesses. He opens videos with, this is how you make money, just like me. He claims he makes. Now, what I would say is, in another video I'll show you, he lives what seems to be very frugally. He lives in it looks like a couple bedroom apartment. His gear is not incredible. He has an IKEA couch behind him.
So he never puts up his
no, he does. He has about
is it all hype?
He has about 95% from what I've read in Tesla, which has gotten him to around 2.5, almost perhaps $3 million, which he shows his changing portfolios.
Okay.
But 95% of his money's in Tesla.
Again, it's funny because he'll do many videos on Tesla. He wears Tesla shirts every video, and then he'll do another video where Bitcoin is the stupidest. I'm sorry, Coinbase is ridiculous, and the fact that Kathy Wood invested in, she's an idiot. So he's kind of
what?
Exactly. He's kind of back and forth, but let's keep going.
If you have a way to evaluate companies that make sense, you know, I read all comments, both good and bad. I used to be a value investor. Thank God I moved on with the times. This is not like the 1980s. So in the...
But yeah, thank God he's moved on, and he'll show you his new approach.
This is not like the 1980s. So in the 70s and 80s, information wasn't like so freely available, and those who had better access to information took advantage of it. It's 2020, man. The internet has connected the world. Warren Buffett's value investing book value PE ratio would have gotten you nowhere and actually underperformed the market. I see comments like, I want to put my money in the...
Yeah, and Warren Buffett has underperformed the market, absolutely.
In
the most
what
raging bull market in history of the world.
Yeah.
Literally, Michael Burry the other day tweeted that this is the most insane, by 2 orders of like magnitude, most overpriced market in the history. Yeah, if you told me 10 years ago that 10 years from now we'd have the most overpriced market in history by 2 magnitudes, I would have said, yeah, Warren Buffett's going to do terrible.
To second that, you don't even have to ask people like Warren Buffett and Michael Burry. You can go to some financial advisors that are like, yeah, this is getting a little bit out of control.
Yeah, and I wouldn't even listen to those financial advisors.
Is those kind of people are starting to say,
let's pump the brakes.
Yeah.
Here we go.
In a safe place. To me, a safe place is a company disrupting others and growing. Anywhere else seems like really
place.
Yeah, you don't understand disruption, Paul.
Unsafe. To the traditional investors, hyper growth stocks that makes no sense. They keep asking, why do they invest everything like maximize cash flow, raise capital, take on debt? To them, they think it's high risk. To me, high risk is not innovating and moving on with the times. To me,
you're
high risk
stupid.
is...
That's why. You're absolutely stupid. I say that with the most. I mean, he's stupid. No, he is dumb.
Sticking to something you know works and think it will work forever. To me, high risk is being stubborn. To me, high risk is thinking you have the best solution. I told you guys many times.
It's like a timeout.
Wait, did he
He's just saying he
himself?
has the best solution. So it's so funny to me when people say that you don't agree with them, you're stubborn. Aren't you equally as stubborn for getting mad at somebody for not agreeing with you?
Spectrum?
I'm okay with his style investing, but to say value investing is dead is a completely ignorant.
Let's keep going. There's a whole nother video here about this.
How
Yeah.
I live my life, run my companies, and generally...
So security analysis was written in 1934. And you're telling me in 1980 people didn't say that it was dead? Of course they did. Because why? Well, Paul, it's different now because it's technology, it's computers, it's internet. It's EV. Well, 20 years ago it was internet. 20 years before that it was personal computers. 20 years before that it was something else. It's always some technology that says this is different.
Yeah, in 2000, value investing was dead.
2007 value investing. 2000 value investing was dead. 1966 value investing, I'm sure, was dead. That this guy is going to have major problems, just like meet Kevin on his Tesla stock. And guess what? He'll blame something else. He will blame something else for why that happens. I have not made any money in the last 5 years. Do I blame anything? No. The market just went even more irrational. Okay. Yeah. Do you see me crying and complaining? No. I'll be patient. I'll wait. Because I know death, taxes, cycles. They all happen. I'll just wait.
Okay.
Values I apply in life. I keep telling myself every day, there is always a certain degree I'm wrong, and my goal is to be less wrong tomorrow. I learned this from the man himself 6 years ago. Think it was back in 2014. You know who I'm referring to?
I don't.
This has made me more grateful to the little things in life, looking at the big picture and keeping myself grounded as I climb the ladder of life.
Fair enough.
So how should one investor approach investing now? It's pretty simple at the same time, like more complicated. But those who get it, gets it. One method is by Chemath. In my opinion, he's one of the best investors out there.
Who?
He'll show this guy's name. I don't. Yeah, this guy.
Oh,
so he says.
Oh, this guy.
Yeah, this guy. He says investing 101 basically says open up your screen time, and if you're not willing to invest in the products that you use, then that's probably a problem. That's
If you're not willing to own the products you use,
yeah.
then
So he
what?
says open up your phone on screen time and look at what you're using on your phone.
Oh, and then buy
And
those
invest in that?
companies.
and then put your money where your mouth is.
Oh, okay.
Good. Dumb.
Yeah. So I'm not investing in TikTok and
Let's
Instagram.
see what I'm going to invest in.
Yeah, let's see, Mo.
right,
Well, for
let's
Paul, it's Bumble and
Grinder.
here we go. Keep going.
101 is an easy test to figure out which public companies you want to invest in. So do the following, like on the iPhone, setting screen time, see all activities.
Do we need to watch anymore?
And a week. If you're not willing to own the products you use, then what? The other method is super simple method and it worked every single time. You see tons of people using the same product or service. Never ever bet against these companies. Think about it.
Oh my God. Listen,
Never ever bet
Listen,
against these
I've said this
companies.
before, and I'm going to get a lot of flack down below in the comments for what I'm about ready to say. These are the people that need to lose a ton of money, and they will. For life to get better for the average person, this person needs to lose a ton of money.
And they might make a ton of money on Tesla, but if they
along
keep
the way.
trying this when he's 65,
eventually there'll be just like, hey, if there's a 1 in 100, if it's a 1 in 1,000 chance that you die any single day, is that a lot? No, but guess what? In 1,000 days, it's going to happen. That's the point people don't realize. If the chance is 1 in 100 that these companies go, that you lose all your money in any given quarter, it's going to take, eventually you will lose all your money. And that's what they don't get. So the same people who brag about being numbers people, they don't understand the basics of probability. The 1 in 100 chance ends up happening 1 out of 100 times. And unfortunately, in these situations, history has shown that the 1 in 100 chance sends you to the poorhouse. And people like this need to lose a lot of money so that the times become better for everybody else out there.
yeah.
Single company.
I don't know if I can listen to this anymore.
Think
a whole nother
Google,
video.
Apple, Netflix, Spotify, Tesla, Amazon. It's crazy for anyone to short a company with tons of raving fans. It is absolutely nuts. Look at Zoom stock price now. It doesn't make sense, but because tons of people are using it,
When was
the
this?
stock price has
Yeah, this was months. This was pre-COVID. He's saying, I'm sorry, maybe it was. I'll get the date. It was like September or something. This was.
not
I'm sorry,
pre-COVID.
not pre-COVID. This was mid-COVID. What I meant to say, and he's talking about how Zoom is very obvious that Zoom would have gone up. Zoom has since gone down. You know.
Well, let's just sit there and say, let's look at Zoom stock now. And by the way, it still could be up.
And then also, you're like, we just saw last week, Apple's coming in and going to compete with them. So these things are just going to keep going up forever, even though there's competition.
Yeah.
And
So-
big competition.
In September, Zoom was 400 and September 1st, it was 430. It is currently 372.
Okay.
It got as low as 280.
Wow. All right, let's keep
But
going.
no, it makes sense though. What do you say? Listen, the same argument made the other way. Well, Paul, if your value investing works, the difference is I don't sit there and claim that value investing works tomorrow. The same way, everybody who does hype says, look at the track record. Well, great. Look at Tesla's track record in the last 3-4 months. It's down 33%.
Yeah.
Oh no, but look. Okay, so now all of a sudden history does matter.
I see.
Like I'm sitting there saying, listen, value investing takes time. You have to wait for the hype to go away.
So he's saying, I watched one of his Tesla videos, and he says something effective. Look, my projection is much like Meet Kevin's in 10 years from now. They're going to be a $4 trillion company. And he said the stock price is going to be $4,000. But even if I'm drastically wrong, I was telling Nate, he says if I'm drastically wrong, maybe it's $2,000. It's still up from 500 to $2,000 in the next 10 years. And for him, that's a great gain. So yeah, I don't know.
I remember I learned this lesson a long time ago. A friend of mine in college, she was trying to become a doctor and she was struggling a little bit. She wasn't in the top 10% of her class or something like that. Her father called her one day and said, when have you ever not been in the top 10% of your class? And she was like, you're right. I'm going to end up doing this. She's not a doctor today. Why? Because when you realize that making a reference based on a history doesn't make any sense, like Tesla, oh, well, it's still going to be high. So even if we're wrong, no, it's possible it actually goes to 50. It's actually very possible it goes to 50.
Mm-hmm.
She didn't become a doctor because she didn't realize she's now in college and not at a very easy high school in Ohio. She's now in college with people around the country in a tough college to get to. Go ahead.
It's funny is the same hype. We hype folks and yourself, we bring up Amazon, but on drastically different measures. They always say, look at what happened to Amazon. You idiots, you didn't invest in Amazon.
And they always pick the one company.
The one company. It's like, but we always like to show that Amazon did indeed plunge almost 90%.
No, 95%.
Prior to going up this
Not almost 90%, 95, 94, 95% prior to its big rise. You might sit there and say, well, see, it was right. Yeah, but
and they refuse to acknowledge the hundreds, if not thousands of others
that went
did not
to zero. That just went to zero.
Or gone. Don't exist anymore.
Yeah.
Rocketed to the moon. Concluding this video, those who refuse to change had many missed opportunities and will continue to have more missed opportunities while bitching to the world.
Maybe in the short term.
I'm fine with that. Maybe, by the way, I'm absolutely fine with that.
Why should our viewers be fine with that?
And maybe it's in the short term only.
You should be fine with it because we're talking about process here. We're trying to teach a process, right? We're trying to teach you how to evaluate a company based on its future potential that factors in a lot of growth in there, but also based on what it's doing today. I think Tesla will be around in 10 years. The question is, are you overpaying for the company today? The answer is an emphatic yes. If you have 100 Teslas at the exact same numbers right now, you're going to lose a lot of money on 95 or 98 of them. History has shown that over and over.
And I think a lot of people think that if you invest in 100 Teslas, you'll get 100 great stories that are going to work.
Is that even possible?
Yeah, or 90.
That's not even possible. I'm going to sit there and say, look at history. They'll be like, well, it's different this time. There's a book right here called It's Different This Time. It's considered the most dangerous 4 words in investing. It's different. But shoot, it's said by those guys who all do really well over long periods of time. Why would I listen to them? So it's so funny to me. We talk about disruptors. Go invest in disruptors. Go invest in the guys who have a 60-year track record of kicking butt in investing.
Yeah, they're old, Paul.
Okay, they're old then.
Yeah,
I can't wait till I'm
old and rich.
Old and really, really rich.
Really, really rich, yeah.
Really rich.
And they're still doing what they were doing to make them very rich.
Yes.
It hasn't changed.
And the difference is also, I'm okay sitting at home and not investing. And you should be okay investing in ETFs for the long haul and just ride the market. You should be okay with that, but don't put your hopes and dreams on, this is bad.
Do you want to see the next?
Is it the Tesla one?
No, the next one is actually entitled "Why Value Investing is Dead."
I thought this was that.
Well,
I kind of want to watch it.
It's kind of a 2-part.
Do you have earplugs so I can plug?
Let me pull it in here.
I'm getting upset.
Here we go.
Oh, that's a nice shirt.
Hi friends, if you are doing value investing now, there is an extremely high probability, 90% in fact, that your returns are
Where
not
did you
as
come up
good
with
as
that
the
number?
overall.
Your returns won't beat the market. It's just
Over what period of time?
just listen to him.
And how does he come up with 90%?
That's what I want to
Hi
know.
friends, if you are doing value investing now, there is an extremely high probability, 90% in
This guy
fact,
is really
that your
stupid.
returns are not as good as
No,
the
this guy is
overall
really,
market
really
is.
stupid.
I love that he said, in fact, it's 90%.
I refuse. I'm not listening anymore. This guy is really, really stupid.
I really want to watch.
No. I know you said don't say that. This guy is really, really stupid. If you want to go listen to him and you think I'm being a bully for saying that, please unsubscribe. Please cancel everything and block me. Block everything having to do with me. I don't want you even looking at anything I do. Please. If you believe this without asking questions, you are dumber than this guy right here.
Index or worse,
Can I flick off the
losing
camera?
money, like Warren Buffett. If you are
Warren Buffett has lost his
in the
magic touch.
90%, I'm going to explain to you why value
I don't want to watch it.
So
I refuse. How long is this video?
10 minutes.
It's long, baby.
Oh, I'm not watching this video. No,
so
I'm not watching this.
In general, like I said before, this guy shows he's got a lot of money. He has a lot of businesses. How about a subscriber count? So I guess my point is, and Nate, if you get the camera here, when you log into YouTube, if you're a new investor, or if you're 60 years old and you're finally getting on YouTube for the first time looking up investing, YouTube will send you to this guy first prior to our channel because he's got more followers and they want to generate more revenue for everybody. So,
his account name is Chicken Tenders Basket from Applebee's. Isn't that what it is?
Mo, your
300.
final 300,000 is your guess?
That's my guess.
Paul?
1 million.
200, a little over 200,000 subscribers. Absolutely love this. And sure enough, one of the first comments I saw in a video is from our dear friend Tom Nash that this guy speaks the truth.
Oh, but Tom Nash is a value investor, though.
No, this guy's awesome, Paul. So
Tom
anyway,
Nash is a value investor. Didn't he say that once?
that's our take.
Or a fundamentals investor?
That's our take on this. So he's a 95%
Everything and
Tesla,
anything.
and he's going to be a gazillionaire with all of his businesses.
Please, Lord Almighty, who I love so
Here
much.
it comes. Here goes.
Please, Lord. There are so many things I don't ask you for. I didn't ask for you for hair on top of my head. I had to go pay for that.
Circumcision. You
I
could've-
didn't ask for that. I had to go pay for that. I am asking you for one thing.
Oh, Lord.
Please, 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 please let these people go broke. I love you dearly. Please don't forget about the kids in Africa who are dying because we help them too. But if you have time in your busy schedule, please, please, please have these people go broke.
Amen.
Okay. Amen. Amen to
Oh,
that.
amen.
Say amen.
Amen. Aren't you going to pray Allah or
that
something?
is our take. Chicken, if you want to come on the show and talk to us about your high-level thought process.
Please email me.
Please email
at CC
Paul.
Paul.
Yes.
And I am serious about this. For everybody out there who's watching the show, if you agree with those people out there, I'm not kidding. Guys, this sounds very arrogant, and it's meant to be. I do this because I love this. I don't do this. Yes, do I make money from it? Absolutely. Absolutely. But if you think there are two worlds here.
Yes.
It's their world and it's my philosophy. You can't possibly say I see both. You literally can't possibly say that. Choose a side. Please. Just choose a side. I don't care if you choose their side. Just choose a side. Because when you choose their side, I'll see you in 2 years. I'll see you at some point in the future when you go, oh, shoot, how did I explain?
Yes.
And guess what? These guys will also be bashing the Teslas of the world at some point in the next 5 or 10 years.
Mm-hmm.
Yeah, they'll say they did something wrong and it was their fault and they don't have forward vision.
They were just doing it a week ago when Elon said he's not
Yeah.
into Bitcoin anymore.
And they
then
got
all of a sudden,
They're going to
that's
say they got complacent like Ford and GM and all those other companies.
Yeah,
No,
so-
it's
Just please choose a side. You might sit there and say, Paul, don't be so mean. Grow a pair. Like, I literally get so frustrated with this because this is exactly what's wrong with the world of finance. We put morons out there. He says a number like 90%. I guarantee he has no numbers to back that up. No numbers to back that up. But let's ignore all the people. And guess what? This is the same person where if Warren Buffett came out and said they like Tesla, he'd be like, see, Warren Buffett likes that. So wait, Warren Buffett...
Is
You
an
should
idiot.
not like Tesla then.
Yeah, you should hate a Tesla then.
Yeah.
But I guarantee if Warren Buffett came up and said, because people always ask me like, hey, you know Berkshire Hathaway bought Amazon? And you know what I say? I'm like, I have no idea how they justify it. But they must see something different than I do. I don't sit there and go, oh my God, I'm going to go buy Amazon. I go, listen, I've run the numbers 1,000 times on Amazon, and the highest value I get for the rosiest assumptions is $2,200 a share. That's the rosiest of rosy assumptions for the next 10 years, in my opinion. Could I be wrong? Absolutely. I've been wrong on Amazon, but I just look at it going,
Yeah, it's a lot of his videos
Please
are
unsubscribe
very
from me.
confusing.
please,
Like-
I hope that when this video comes out, if you really agree with him, we see a massive unsubscribe number because I just don't want to have anything to do with anybody watching us who doesn't want to understand the numbers behind investing. And if you agree with us, I appreciate it. And guess what? I'm wrong an awful lot. Just like the consistency of me. When people come and thank me, Paul, thank you for your investing advice. What do I always say to them?
Well, you're not really proved, right? Thank me in 30 years when you're a
Thank me
multimillionaire.
in 5, 10, 15, 20 years
Yes.
when my methods have proven out.
Not 6
I don't
months.
ask for accolades right now.
So the comments we'll get is this guy has way more subscribers than you guys. He
Oh.
must be right. This is what's down below.
And if you think that, then that's why you believe in what he's saying because all you care about is what's going on, right? All you care
Right
about is
now.
the most recent stuff.
Yeah.
More power to you. I hope we will have 500,000 subscribers, 200,000. We'll have guess what? I want them to be good subscribers.
Yes.
I've said this 1,000 times. If we max out at 500,000, but it's 500,000 people who really believe that what we're doing and the way we speak to them is accurate, then I'm happy.
yeah, it's got to.
I don't need to have 10 million in subscribers. You know why? I've got 8, 9 businesses upstairs. I got real estate. I got everything I have going, and I have a wonderful life, not just material wise, but also like we do. Mo, what were we talking about last night? I was just like, this is our life.
Yeah, I know.
Yeah.
And
Our life is literally doing whatever we want.
the comments are, if you guys have so much money, then why would we be doing this? And I'm
Because we want to educate
that's what I'm saying.
people.
I'm just
That's
driving
it.
in my car like, this is our life. It's so much fun.
It's
to
so
have these
much fun.
Great.
conversations.
If you don't want to be educated by us,
Yeah.
bye.
Bye. See ya.
I
Bye,
like
Felicia.
I teach at my high school, and I'm trying to and teaching at my brother's law school here for free.
Oh,
That's how
listen
much
to
I
this.
What?
The econ department from my high school emailed me the other day, and they said, "Hey, we want you to come in this summer. We want to build you into the curriculum." So I'm going to
Isn't that
teach
nice?
at my school for free.
I'm going to go to my high school and yell at them and say, an inefficient bureaucratic public school is getting them in before they're getting me on a curriculum basis.
What?
Well, that's our take, guys.
For free. Or
Again,
free.
If this resonates with you, it might be something new. And unfortunately, if this is your investing style, like Paul said, our investing style looks sort of wrong right now,
Right
Paul.
now it does.
But when the days are red, people flock to this channel looking for answers when all of that doesn't work anymore. And so if we don't see it now, we'll see in a couple of years because we'll certainly be doing this. So that's our take on Chicken Genius.
Guys, trust me on this one. I see it every single time. I've read about it in history. 10, 15 years from now, these people will be out of the business. They'll move on to something else.
Yep, and they say that about us. So
Great. Sounds good.
See you in decade.
Warren Buffett, Charlie Munger, Howard Marks, all these value investors all the real value investors are still around.
yeah. And they're in their Mexican mansions, which will be
And
will
Turks
be in
and Caicos.
January.
Turks and Caicos.
So yeah, congrats on the new house. All right, guys, that's our take. See ya. If smash the fondle the thumbs up. Don't smash. This is too much. We gotta caress this.
By the way,
thing
please
here.
do me a favor. Also,
ahead.
at the end of the video, write in the comments below how much you hate me on a scale of 1 to 10.
Yeah, you should get
So, like, I hate Paul a 7 out of 10.
it'd be like we'll get a lot of the Russians 9.4 from
You
the
know what we should
Russians.
start doing? We should start giving
Don't
out
give
like
any
a
rookie
PO. We
scores.
should start giving out like a PO box for me. Be like, hey, if you hate me, please send me hate mail. Please send it to this address.
Send it to your Mexican mansion.
Pedro will be
send mail to the Mexico house.
Pedro will be so overwhelmed reading them.
yeah. All right,
Yeah,
that's
but you have to send them in Spanish though.
That's our take, guys. We'll see you next video. Love you.